All right, David. Today we're going to talk about several things,
Ooh, okay, let's go.
but I'll give you the magic words that people all use. Liquidity, market structure, trading the news, okay?
All right. I got
So
it.
let's start with the basics. What to you is market structure, David?
It's the same thing it means to you. It's the highest highs and the lowest lows and the high lows and the lowest highs. So it's finding, which ties into liquidity too, but basically you're looking for where there's the highest high, where basically it went and did a turnaround. It was going in a direction, it's the highest thing, and then started going someplace else. It's about as simplistic of terms as I can use. But you use it, I use it. It's where's the highest point for, oh, you put your labels on. Where's the highest point of like that one? So, and then where was the previous one? Right. So that's basically, if it went there once, it's probably going to go there again. If it turned around once, it'll probably go back to that eventually. And that's what I look at is quote unquote pools or liquidity right there is basically they form around those points because somebody got left behind there. You know, a bunch of orders got left behind there because it went another direction. So they just let it sit.
Yeah.
So they're probably still sitting there. So it's going to go back there eventually and fill those orders.
That is exactly correct. So
I had a good teacher.
Thank you. What people are looking for is, if you look over here on the left, you have a label that said higher high. Okay. Now, this is all my code, but you can get this for free in any charting package. Okay. Mine's just a little funkier because it's doing some additional things with it and capturing additional data that benefits me. So, but the idea is that price will move up to a higher high. And as long as it keeps going in that direction, that sets the tone for the swing. Okay. The swing is just whatever the most current leg of a price action is right now. So when I say the swing is bullish, that means because the particular chunk of price that I'm looking at right now is bullish. When it says that the structure is bullish, that means that the overall trend of multiple swings is bullish. Okay. Does that make sense? I hopefully didn't confuse everybody on that. So let me show you here. So this is a higher high. The only thing that breaks the trend to the upside is a lower low, which is right here. So right here on this leg, where the swing on this leg would have been bearish, the structure changed to moving to the downside. Okay. That also became bearish because we hit a lower low. And then it stays in that direction until that gets broken again. So this whole time, you see we're getting lower lows, lower lows, lower lows. Okay. And then right here, we got a lower high. Okay. Now we've hit a higher high. So that breaks the move to the downside. So now the move is to the upside. That's why the structure is bullish and the current swing is bullish. Took me a really long time to understand that because it is kind of confusing. Okay.
Yeah, because everybody wants to take just segments, not as a whole.
Right.
And that's basically what it's don't just look point to point. You have to look a couple points in advance on that.
Yeah. It's like, let me see if I can show you this better. So this is the whole structure here is up. Okay. In that circle. Okay. Then we got lower low. So then the whole structure from here to here is down. Okay.
Yep.
Then we got a higher high. So now the structure right now is bullish. Is that easier to see? But it's hard to understand that when you're first starting out. It's like you see all these lines and shit, and it makes you nuts. It makes you go.
Well, yeah, I mean, it's like, and then everybody and their brother has too many of the. There's another topic. Too many indicators, but Yeah, it makes it easier if you don't look at the candles, but look at the lines. Like Bill's lines are really nice because they're very vibrant.
Big,
Right. And you can see them where they are. So it's like you know where the candles are. The candles are going to do their thing. They're all over the place.
right?
And it's just like so it's nice to see just a line
It
because
brings a little order to the chaos,
right. And there you go. That's a good way to
right? Because if you
yeah.
look at, like, if I just do this, if I do,
Yeah, turn it off, aren't you?
yes, I am,
Nah, boy, here we go.
you know,
Mhm.
then you don't know what, then you're like, what the hell's going on? I don't know. It's going up, it's going down, it's doing this shit, you know. But then
Mhm.
this brings a little bit of order to it. So all I got to do is say, oh, look, it's going up. Okay, I know it's going up. So I probably should be looking for ones going up.
Right.
It's literally that stupid. But I took the tags off because they were distracting me. Believe it or
Really?
not. I was
Oh,
like,
okay.
but and I know, and I have this internalized now, so I don't need to see them to know that what's going on.
Right.
But a newer person might. So let me turn these off real quick
Yeah, before you forget.
before. So this is a much cleaner look for me. And let's just go through a couple of these charts to show you how you would use this. And this is like the stuff that I do in the videos, the trading videos all week long. But, you know, repetition is the seed of knowledge. Yeah. So, like, here's a potential trade because the current swing is up. I don't worry so much if the structure is going in the same direction as the current swing when I'm looking for a trade. Because, I mean, it's great if it is, because that means that's syzygy. That's when all the planets line up, right?
Yep.
But right now, I would say this is in an upward trend. This is what, Aussie US dollar.
Yeah.
It just popped over the support area here. As you can see,
Mhm.
that's why the syzygy signal fired, because
Right.
that's what it's looking for. So this is a solid long. Also, volume is moving to the upside. So
Yeah.
what this means down here, my code looks at how many people are buying and how many people are selling, and then plots this histogram to tell me the direction of the buy or the buying or the selling. So right now, the buying is outpacing the selling, whereas back here, the selling was outpacing the buying. And then
Mhm.
here's a flipperoo right here, you know, where it flips
Right.
from one direction to the other. So yeah, those three, if you can figure out those three things, you can figure out what's going on. But yeah, market structure is simply learning how to identify these three things: the swing, the overall trend, support and resistance, and the
Mhm.
volume. That's the magic. That's the keys to the kingdom. That's all you need to know to trade. People will tell you
Mhm.
that, you know, this gadget or that gadget or this
It's because
beanstalk.
it was right once.
Right. Correct.
You know, just because it's right once, it's just consistent is the big key.
Let me bring up another thing.
Mhm.
What do you think about liquidity? When people say liquidity, what does that mean to you?
That's we used when we were learning. We used pools or lakes, but yeah,
Yeah.
it basically that's where the orders sit.
Right.
When you have people selling and their orders just sitting at a certain price point and they're waiting for it to sell when it reaches there. And maybe it does a turnaround and starts going, long.
Right.
That's a pool of orders that's just waiting. It's the same thing as when you're like losing money on a trade, you've become part of that little liquidity there. Well, if you have enough people looking at liquidity at that point, or the banks, the mighty computers say there's enough things there, that's like a pool of liquidity to me.
Okay.
So there's a ton of orders there, and normally it's done by the highest highs and the lowest lows type of thing, like
That
a
is
previous.
that is correct. So
So that's basically what I look at.
I'm going to say the same thing in a different way.
No people.
The visual representation of liquidity is support and resistance.
Hmm.
Does that make sense?
Yeah.
Okay. So what Dave was saying is this is liquidity. This is what my code looks for. See the big green and the big gray.
Mhm.
Okay. And then what you're going to do is you're going to overlap and all the structure stuff on top of that and use those two things together to figure out where to take trades or not take trades. But the oversimplified definition of liquidity is It's a place where a lot of people bought or sold in the past. Okay. Now there's a lot of, magic tales and lore and the monster tales about how this all works. It's the bankers, it's the
Mhm.
what do they call those?
Pay no attention to the man behind the curtain.
Yeah, yeah, yeah.
Oh, there it is. It's been
It's
copyrighted.
the
Oh, we're done.
evil, the man. It's the
Yeah.
this, it's the that. Yeah, there's a little bit of that, but it's far less than what is the reality of the thing. It's just, think of it this way: the visual representation. Liquidity is the visual representation. No, wait, I'm sorry, I said it backwards. The visual representation of liquidity is support and resistance. Okay.
Hmm.
So if you look right here, you had price go up into a liquidity zone order pool, the banker vault.
Yeah.
Okay. And then this has previously been a place where people have sold. So what did price do? It sold off from that point. Okay.
Hmm.
And then it did it again and again and again. And finally, what I used to teach Dave when we first started was finally
Hmm.
somebody drains the pool and then it starts going in the other direction. So the pool got drained right around here.
Hmm.
Okay. Got this big bar, right? That's where the plug got pulled in the pool. It chopped sideways for a little while. Think of that as the water circling around the drain. And then it went down to here. And then it reacted to this order pool, liquidity zone,
Hmm.
banker bullshit. And price bounced to the upside, ran out of gas, came down, chopped a little ways. Here's the plug being pulled on the pool again. Okay. Chopped
Uh-huh.
sideways, and now it's creeping up. That's
Yeah.
exactly what's happening here. So there you go. Master class in liquidity and market structure.
Yeah. There you go.
Um,
Perfect.
Now, Dave, let me add a little twist to the thing here.
All right.
Now, what happens if we throw news into the equation? Okay, because we got
Oh,
a big piece of news today. We have
especially on this
Fed
one.
minutes today at 1 o'clock.
We have two pieces of news then because
Yes,
we have
we have
employment
Fed
and
minutes at
unemployment in the Aussie down.
right. So, oh yeah, when's that? That's later though.
That's 8:30 this night. So
Okay, that's
yeah.
what I thought. Yeah. Okay, so here's what I think will happen. Maybe I should bring up a U.S. pair so we can use that as an example because that would probably be
Yeah.
better example. Okay, so this is US CAD and looks like price is resting on an area of support right
Hmm.
here. Okay.
Yes.
And at 1 o'clock, the Fed is going to release the notes, which I never understood this because they have their announcement and then they have, and people react to the announcement and then they release the notes, which is the written version of what they just announced, and somehow people get their Ouija boards out and they read magic things into that somehow.
It's the tea leaves, Bill. It's the
It's
tea
the tea leaves.
leaves.
And then we get crazy reactions to that, like Joey had to go to the bathroom, but when he came out, he said this, and then price goes crazy.
Yeah, it's
So
like, oh, somebody must have talked to him in the bathroom, and
yeah,
this person, yeah,
yeah. So here's my Karnak for the
yeah.
Fed minutes, okay? Because I've seen this a million times. I might be wrong because it doesn't always happen, but I always think that the larger players, and by that I mean just organizations and financial institutions that move large chunks of product,
Uh-huh.
they tee up. I do believe this. I do think that they get the little, hey, QT, hey, Johnny Joe, what's the, which horse is going to win in the race? That kind of shit,
Yeah.
right? And I do think they have a heads up. So they will pre-position where they're at in a particular instrument in advance.
Mhm.
Let me show you visual aid here. Okay. So we know that today there is going to be a Fed announcement. So prices have been going down, 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 down on USCAD.
Uh-huh.
And it's now resting right here very conveniently.
Uh-huh.
So they're going to announce that. And then what I think based on that news is going to happen is it's going to do one of these. But it probably won't do that very clean. It might go like this and this. I don't
Right.
know. It's a crapshoot. So remember, trading is risky and you may lose money. So don't be a fucking retard
Right.
and just say, "Oh, Bill said
Yeah.
this," and put all your money on lucky seven. So yeah, usually I sit these things out for at least 15 minutes to 30 minutes just to kind of see
Well,
what.
you got to see where the idiots go.
Yeah, exactly. You got to see where the idiots go.
Right.
But usually when price is being pushed down prior to that Fed announcement, it's usually because they want it to go up, and the reverse, right? In the opposite direction. If it's going way up, they want to smash
especially
it
with,
down.
especially it's going to be really strange because evidently there's a deal in the works with Canada for trade because Trump just reduced their tariffs by 50%.
Oh, okay. They must have decided to play ball with us.
Yeah.
Okay.
So they decided to do that.
Mm-hmm.
And then you have the Fed coming out today. Now they held rates last time, but I think eventually they're going to be, interest rates are probably going to go up eventually at 25% or 25 basis point hike somewhere.
Right.
At least that's my opinion. So what's going to happen? Well, which news event is more panics the people more? And that's what you have to really, that's the problem.
Right.
It's because they could have major news and this thing might not even move.
Right.
And that's why Bill, I know Bill doesn't, I don't trade it either.
Yeah.
If there's major news announcements, I make sure I'm out of a trade if I can help it.
Right.
And
I did know a guy once. He had a really effective way of trading the news. So what he would do is like, how would I do this? Is there an indicator I can bring up to show that? Indicator, moving average. Do I want?
I mean, you could put an order going long and an order going short, and wherever it hits first. Oh, I'm sorry. Am I
stealing my thunder?
Okay,
I'm just
sorry.
trying to find. I'm just trying to find the right kind of moving average to show you. I know this ribbon one will do it, but it's got like so many.
For 1995, you two can.
Yeah, this one's too much. I'll draw it.
Okay.
Okay. So what this guy used to do, this is when I first was learning how to trade, is he would be in price. You know, he's watching it. There's going to be a news event in a minute, right? So he would have a 50 period moving average above price and a 50 period moving average below price. Okay. Sometimes a 200, depended on the news announcement. And what he would do is he had a short position set here and a long position set here. And then the news would happen and the price would spike either up or down, grab his position and then immediately spring back to the mean. And then he'd get out. The whole trade took like a second. And he made ridiculously huge amounts of money doing this. But he literally only traded like 4 or 5 times a month because that was when the big announcements happened. And it worked really, really well for the most part. And I copied him a few times and I did okay, but I didn't want, because it wasn't enough trading for me. I wanted more action. You know what I mean?
Right.
But this guy did that. So I thought that was interesting. So that was one way to trade. You know, that's one way to think about it. So
Until you have the creep and then it doesn't actually, you know,
right.
Or the slide is actually called.
Sometimes you get zero reaction, which is very weird.
Yeah. But if you are putting, if you are putting the price there and you're not in it yet,
right?
You really haven't lost anything there. It's a decent thing. I mean, it seems to be intelligent. I mean, I look at it and just go, looks pretty nice.
Yeah.
But yeah, I just don't. It's a 50-50 shot.
Yeah.
I like more. I don't like a coin flip. You know,
I agree. But that's the way some people trade.
I know. Well, technically 45-45 because the rest is it won't do anything. So yeah, it's not a percentage I like to play.
All right. I think we talked this one up.
All righty.
Have a good one, David.
All right, you too.
Yeah.
Have a good day.
Ready to trade with an unfair advantage? Transform your results with the Syzygy AI Edge. We run on a value for value model. No ads, no sales pitches. If you got value from this video, hit the donate link in our bio to support the show. While you're there, grab our free strategy guide, join the trade faction on Slack, or download the Forex AI Sage app. It's all free at Waverider Trading Technologies.com. Like, subscribe, and trade smart.